In this video, we're going to discuss support and resistance for day traders, and it's going to be very much a beginner-friendly discussion. So you can think of this sort of as an introduction to support and resistance. So we're going to talk about what it is, go over a few definitions, and look at some images and talk about the psychology behind these different levels. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time day trader, and I am at the stage now where I'm studying technical analysis, and certainly support and resistance is a big sort of foundational component of technical analysis. Now, if you'd like to download my 6-month blueprint, which outlines all the steps that I'm currently taking in the first 6 months of this journey, you can find a link to that below this video. So let's jump right into it and talk about support and resistance for day traders, sort of a beginner-friendly discussion. Now, as someone who is studying to become a full-time day trader, so that is me, and if you're watching this video, that's probably you as well, you probably realize, or you will realize soon, that technical analysis and mastering that is going to be really important. It's sort of like the way that you do short-term trading. So imagine being able to predict where the price of a stock might reverse or pause, giving you the confidence to make informed trading decisions. By mastering support and resistance, you can gain an edge in the market, helping you to spot opportunities and manage your trades more effectively. So that's sort of like the sales pitch for support and resistance, being able to, maybe forecast where a price of a stock, so we're talking stocks here, might reverse or pause, and just knowing that information, could give you an edge in your training, and whether you use it in your specific strategy or not, just understanding support and resistance is crucial for you as a day trader. Certainly, many successful traders will recommend that understanding this concept is really important. So that's really what we're going to do in this video. So what I'd like to do, and what I've done in some other videos and some podcasts that we've run, is I like to ask the AI tool Grok, so it's the AI tool from X, sort of just to give us an engaging and fun definition of support and resistance. And then afterwards, we can sort of get into more of a formal one. But if we read through this now, I might be able to give you an easy to understand visual of what support and resistance is. I found it useful, so I thought I would share it here in this video. So here's what Grok said in regards to support and resistance in a fun and engaging way. So imagine you're on a mountain and you're a mountain climber and you're scaling the treacherous peaks and valleys of the financial markets. Now imagine there are two magical lines that help you on your journey. One line is a safety net that catches you when you fall, so that is support. And the other is a ceiling that stops you from going too high. That is resistance. So support and resistance are like your trusty climbing gear. When you're falling, support is the rope that stops your descent and gives you a chance to catch your breath. It's the level where demand for an asset is strong enough to prevent the price from declining further. Now, on the other hand, resistance is like that annoying branch that keeps poking you in the face when you're trying to reach the summit. It's the level where selling pressure is strong enough to stop the price from rising further. So these lines aren't static though. As you climb higher or fall lower, the support and resistance levels can change. Sometimes they can even switch roles. So it's like the mountain is playing a game of musical chairs with your climbing gear. So next time you're analyzing charts, remember the story of the mountain climbing. Price, support, and resistance levels are your friends, guiding you through the unpredictable terrain of the financial market. So if you just sort of have that visual of, a price of a stock, it moves in peaks and troughs, just like a mountain. You can sort of visualize, the price climbing up, and there are these resistant levels and these support levels within the price of a stock that can help you predict where the stock might go or where the stock might pause. So if we kind of get into, more of a formal definition now, what support and resistance really is, these are areas on a price chart where the market tends to reverse its direction or pause. So support is a level where a declining market finds buyers and it begins to rise. So if we are in a downtrend, you can sort of see right here on this image on the screen here, you've got a downtrend here, and then you've got this area of support where a declining market will find some buyers in this area, and then the stock begins to rise. And then on the other hand, resistance is a level where a rising market will encounter sellers, and the price will either pause or potentially start to fall. So these levels are crucial for traders to identify, potential buying and selling opportunities. So, why are these levels essential, and how do you identify them? Well, many new traders often overlook the importance of support and resistance. They focus instead on, more complex indicators. And we're going to get into these as well: Fibonacci levels, Bollinger Bands, and so on. However, support and resistance provide basic yet powerful insights into the market sentiment and behavior. So we're going to talk about the psychology behind these levels as well. And what they do is they highlight where the market perceives value and reacts accordingly, making them invaluable for making trading decisions. So it's important to really know these because they can potentially help you with your trading decisions. So support and resistance levels, they can be identified across various time frames. Whether you're looking at a weekly, daily, hourly chart, you can find them. And a level becomes resistance if the market fails to break through it and reverses back down. And then a level becomes support if the market holds above it and bounces back up. So here's just another image here showing these highlighted levels of support and resistance. So the stock, rose up and reached this sort of level here, which was an indicated line of resistance, and met with many buyers, which forced the stock back down. And in this area of support here, the stock is falling, and buyers have come in to sort of buy up the stock as it is reaching down this level, and this becomes a level of support. So you can see these very clearly when you start analyzing various charts. So in terms of practical applications, we talked a little bit about this. Traders can use these support and resistance levels to make trading decisions. So if the market is approaching a resistance level and it fails to break through, this could be an opportunity to sell short. And if the market is nearing a support level and the support holds, that could be a good buying opportunity. And again, everyone's going to have different strategies, but that is certainly something that is a common thing that is done. So support and resistance works across all time frames, all markets. And we're talking stocks a lot on this channel, but you can use this for the forex market, trading commodities as well. And just understanding these levels can help you anticipate market movements and make more strategic trades. So there is this level of psychology behind support and resistance. And I've watched a few videos where people have asked successful traders, why do these levels work, and why do they hold up? And there's logical answers. There's not always like the perfect explanation, because support and levels don't always hold. We'll talk about when they break, but there is this psychology behind these levels. So again, support is a price level where a downtrend can be expected to pause due to a concentration of buying interest. So it indicates that buyers are willing to purchase the security at that price, sort of creating a floor that supports that price. And then on the other hand, resistance is a price where an uptrend can potentially pause due to a concentration of selling interest. So it shows that sellers are willing to sell the security at that price, creating a ceiling. So before we talk about the traders at resistance and the specific traders at the support levels and how they might influence resistance actually working or support actually working, let's just jump over and look at a few images and kind of focus on what I just talked about, but have an actual visual representation as well. So let me bring up that tab right now. Okay, so here is just that first image that we sort of saw. You can see that this area is outlined as an area of support, and here is an outlined area of this was an outlined area of resistance, and here is an outlined area of support. So as the stock rose up, in this area, and this is a Forex chart, but we can just call it 1.195. The stock tried to break through, met resistance, so met a lot of sellers here, dropped back down, came back up, potentially met a lot of sellers here, and then the stock receded back down in a downtrend and is trending down here. And then for a few months, you can just see that it's sort of stuck around this support level. So it touched down to 1.16 and, buyers came in and had some buying pressure here, driving the stock back up, and it receded back down to this area. And again, right at this 1.165, buyers came in and this could be a level of support. If we just look at another image here, we can see that, you've got a level of resistance up here. And actually later on, many months throughout this year, this level of resistance also becomes a level of resistance here as well. And you can see that support levels also are support levels, later on in the future of the stock. And you can look at past history as well. So April, we've got, a support level here. And then later in August, it's a significant level here. So, you can see that the stock rose up, had some resistance, came back down, and then a lot of buying pressure here at this particular level. And, buyers came in and the stock rose back up, but it was met again by resistance. So you've got selling pressure here right around this sort of area of support. So these lines aren't perfect. They're not exact, but they certainly are there. And they are there in many different financial assets, and one level of support in certain time frame of a stock or an asset can certainly become another area of support or resistance, and so on. So that's just a sort of visual of this. I would recommend that these images are courtesy of TradingView. You can open up a free TradingView account. There will be a link below in the description, and you can play around with different stocks and charts and sort of see these visuals for yourself and see these areas of support and resistance. Okay, so now that we have sort of that visual in mind, and hopefully that was useful, we can talk about the different traders at levels of resistance and levels of support. So if we think of the long trader when it comes to a resistance level, traders who bought early and are holding on to their positions in an uptrend, they might see the resistance level because they've plotted it out on their chart. They know it's been a resistance level in the past, or it's been a significant price level in the past where there's been support or resistance. They might see that as a potential point to take profits. And, they might sell their positions at that level, and that's going to contribute to some selling pressure. So the stocks rose up, it's rose into this resistance level that's known for many traders, and they will sell their shares, take profits, and there's a lot of selling pressure there, which creates the resistance. But there's also, early sellers and then short sellers potentially in this area as well. So traders who maybe sold too early in the uptrend might regret their decision as they see the price rising into this resistance level. Now, if the price surpasses the resistance, they might buy back into the market to avoid missing out on further gains. So that's sort of a scenario where the resistance might not hold and then the stock will rise up further. Now, there are potentially short sellers in this resistance area as well. So traders who have taken a short position expecting the price to fall. So as the price rises up into a resistance level, some people will decide to sell the stock short, expecting the price to meet resistance and fall. And they might see that as a safe trade. But if price actually breaks above the resistance, these traders might look to cover their short position and add to actual buying pressure, and you might see the stock break through resistance and rise up. So there's this idea, support and resistance don't always hold. Many times with the long trader scenarios, many people are going to be selling at the resistance level, and the resistance level will hold, but the stock certainly can break through the resistance level. So when the price breaks through a resistance level, it signifies that the buying pressure has overwhelmed the selling pressure. So the combined actions of potentially early sellers buying back in or short sellers covering their positions because resistance did not hold, and new buyers entering the market push the price higher, and this momentum can cause a sharp increase in price as the resistance level turns into a new support level. So if we just kind of jump back over to those images we were looking at, we can sort of see a resistance level that potentially breaks out. And we can kind of see one potentially here. So, we've got a level of resistance down here. The stock has fallen down and it's coming back up to meet this resistance level. Before it was support, but it's broken down. Support did not hold. And when support doesn't hold, these levels typically turn into resistance levels. So the stock was coming back up here, met resistance, came back down, met resistance again. But this could be a scenario where people were expecting the resistance to hold. They went short, it didn't, and then they need to buy back in to cover their shares, or people were looking to go long in this area, and suddenly we get a big spike in the price there. So that is one example. You can find other charting examples where this potentially can happen. And we'll leave this chart up and talk about the traders at the support level as well. And that could be a better image to reference again. So that was the traders at the resistance level, having a lot of buying pressure, keeping the resistance level there, but then potentially breaking through. But then we can look also at the support level. So here you're going to have long traders, and you're going to have early traders, early sellers and short sellers as well. So in terms of the support level there, traders may see the support level as a good time to buy, believing the price will not fall further. So that is when a support holds. So the price is dropping into a support level. People are expecting that to be support, and they buy the shares. So there's a lot of buying pressure, which makes support hold, and then the price rises back up. But if support doesn't hold, you've got early sellers and you've got short sellers potentially in that scenario. So if the price falls below the support level, it signals that the selling pressure has overwhelmed the buying pressure, and traders who were long, they might panic and sell their positions, while the short sellers might gain confidence and increase their short position, driving down the price. So the breaking of support, when price breaks below a support level, it often leads to panic selling from long traders and increased short selling. This creates some downward momentum, causing the price to fall further. So if we jump back over to that image that we were looking at, it certainly had some better examples of support not holding. So many of these areas, we're in a downtrend here. So it's a better example to talk about support not holding. So we've got support levels here, but, and all of these levels, the support didn't hold. So as it broke, people begin shorting the stock here, and people who thought this was support and bought into support hoping that it would hold and the stock or the asset would rise higher, potentially might start selling again. And then you've got a level of support here, again, rising up, and then this support now turns into resistance, and off the resistance, it falls again. And we've got a level of support here, and people might be hoping that it holds. They might buy into support, hoping that it holds, but it doesn't. It breaks through, and then you've got another bit of panic selling or some short selling happening here. So, if you can understand the psychology that we talked about here, the different traders at play when support and levels are getting established, and you can look at some charts and just reference these support and resistance levels and think about what's happening there in the broader market. That could be a good stepping stone into getting a good grasp of these support and resistance levels. So there we talked about, and we mentioned that when support or resistance is broken, certainly that happens, then the roles tend to reverse. So there is this role reversal of support and resistance. When a level is broken, it often then becomes a new support level or a new resistance level. And we saw that in the image of the chart. And, why don't we just jump back just to get a good grasp here. So, this level at one point here, this was support. We had support here. The stock rose back up. We came back down. It broke, and Now it dropped down to this new level of support, but as the stock rose back up, this old support level now becomes resistance. And you can see it sort of happens throughout this asset's 1 year time frame. We've got a support level here where the stock goes back up, it comes back down. We've got another support and the stock rises back up, but we've got too much selling pressure here and the stock falls. But as the stock rises back up, this old level of support now becomes a level of resistance. And you've got buyers coming in here, you got sellers coming in here because this is a new resistance level where in the past it was support. So that's the idea here, that the roles of support and resistance do get reversed in certain situations when these levels are broken. So traders, just talking through what might be happening, traders who missed the initial breakout might look to buy at the previous resistance levels, now seeing it as a buying opportunity. So that's for resistance. So if there is resistance and people didn't buy the uptrend into the resistance and there's a breakout, now they might look to buy more. So there's more buying pressure, there's buying opportunity, and that resistance level becomes support. Traders who maybe took profits at the resistance might re-enter it. So people that were assuming resistance was going to hold and they've held up, or they were assuming resistance was going to hold and the stock was going to pull back, they may have sold and now the stock broke out. Well, now they might rebuy back in and creating now a level of support in that area. And then short sellers, who covered their positions might also look to re-enter the market on a retest of the previous resistance level. So people may have sold the stock short, expecting resistance to hold and the stock to come back down, but they've kind of covered their positions. So there's more buying pressure and now resistance becomes a level of support. And similarly, when a support level is broken, it often becomes a new resistance level, because traders who bought at the support might sell if the price rises back up to the level to minimize their losses. So if the stock was falling in a downtrend and there was an area of support, people thought that it would hold and they bought. Well, the stock broke the level of support, fell back down. As it rises back up, those people that bought might want to sell and reduce losses if the stock continues in a downward movement. So understanding the psychology of support and resistance helps traders anticipate market movement. So resistance levels break when there's buying pressure that overwhelms the selling pressure, and support levels will break when selling pressure overwhelms buying pressure. So the role reversal of these levels is driven by actions and reactions of different types of traders, including what we spoke about, some long traders, short traders, and then early sellers. So recognizing these patterns can help us make more informed decisions and better predict a price movement. Now, also keep in mind, these patterns, they don't work perfectly. They don't always happen this way. Resistance can hold, support can hold, but like we've seen, there's scenarios often where they are broken. So they don't work out perfectly, these patterns, but they certainly are there. When these levels are broken, it doesn't always mean that the trend will continue higher or lower. So, hopefully through that example, talking about those different psychology of the buyers and sellers who are in these positions can help you get a better grasp of what is going on with these various support and resistance levels. And then certainly those images might be able to give you a clearer picture of what is going on. So if we just do a quick recap here, in the world of technical analysis, so we're doing day trading, we're studying to become full-time day traders. We need to understand and get a good grasp of technical analysis. It's something we're going to continue to work on and mastering, over the years of our careers. In this world, though, of technical analysis, support and resistance, it's like the invisible hands guiding the price movements of financial assets. So think of support as a floor of a room and resistance as the ceiling. So when the price of an asset reaches the support level, it's like hitting the floor. There's a tendency for the price to bounce back up, obviously not always. And when the price reaches a resistance level, it's like hitting the ceiling and price may bounce back down. So support and resistance, they're crucial for us because they can help us identify potential entry and exit positions with our day trading strategy. So if the price is approaching a well-known support level, like we talked about, that might be a good time to buy, as the price could potentially rebound. Or on the other hand, if the price is approaching a resistance level, that might be a good time to sell if we are expecting the price to come back and fall. So again, these levels are not set in stone. They can change over time. And once support or resistance level is breached, it can flip its roles. And we talked about that role reversal. If the price falls below a certain support level, then that level now can become a new resistance level. And again, you can check out TradingView. You can look at some history of charts and stocks and really see that these levels are clearly there. So keep in mind, there's always advice that people give in terms of trading, that you should just trade with the trend. You might not want to anticipate reversals at resistance or support levels, but eventually when we start learning some day trading strategies here on this channel and through this journey, it's going to help us make better informed decisions on whether we want to trade around support and resistance. Just understanding what these levels are, why they exist, that they're there, and what our trading strategy is going to be. It's going to help us get a good foundation and then lead us into some good strategic strategy. So I hope that you found this video useful. Please subscribe to this YouTube channel. Consider downloading my 6-month blueprint if you are a beginner and you're looking to get into day trading. You sort of don't know where to start. That blueprint is going to outline everything that I've done over the first 6 months of this journey. So thanks so much for watching. I look forward to talking with you in the next video, and I will talk with you soon.